All right, just give it a minute for a couple more people to join. So, sit tight. All right. Um, everyone can hear me, right? All right. So yeah, I don't have a lot of time, but I wanted to just quickly catch up on BTC. So my most recent trade, right here. So we had bonerific support range right there. Massive bone reducing support. You can see boom, 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 boom. Lots of support right there. I didn't think we would break down. I didn't know if we would get all the way down to test it. So that's why I set some buy orders around here. I had a bunch of different buys, 2 out of 4 of them filled, one of which was within like a couple dollars of the bottom of that candle. The order wasn't that big. It was a pretty decent size, so there was a lot of volume on that sell. Somebody was selling quite a bit to get through my buy order and then a little bit lower. So, but yeah, I'm happy because I got a pretty substantial sum in on those two out of my 4 buys. Anyway, so right now, it's a risk-free trade. I have a stop loss right at my entry. I'm currently up 5%, but I have a stop loss right here. I'm going to move it up again now that we're above the 99, the 55, and the 222 EMAs, and above the cloud. There's a ton of support there with my Ichima dynamics, right? So each of those is one of my Ichima dynamic support levels. You can see right here, major resistance from the 55, break through the 55, major resistance from the 99, and this time we push through all of them. We also are riding along the bottom of the cloud. The bottom and the top of the cloud are 2 of my 5 dynamic supports for my Ichima model. You can see over here how much resistance there was where all those EMAs were. Same thing. And then once we were on the top looking down, right, we broke through and then came down. A ton of support from the 55 and the 99. A lot of support right here from the 99 or from the 55 before it failed. Then several candles that it held at the 99. And then it broke through, and then on the way back up again, you can see. So using those 5 dynamic supports are how I do a lot of my trades. Again, right here, a lot of resistance. Every time it was hitting the 55 EMA, it was getting rejected. When it did pass the 55, it would hit the 99 and get rejected. So that guides a lot of my trades. In this case, I was pretty confident we would get close to the support range. We did, filled my order. I'm in a really great position now, and now all of these are serving as supports. 55 crosses the 99. That's a great additional support sign. If we continue upward and we cross the 222, that's another very bullish sign, much like what happened over here when they started to cross. See, crossed right here, the first cross, and then eventually they got even closer, and then they never crossed the 222, but they got really close before then. Then they crossed the 222 here, and that's when it was even more bullish, and then eventually we retraced. That last play that I called on BTC was insane. I mean, it was, I entered right on the Ichima supports, and then it just exploded. My count was actually pretty on point too. It was only slightly off. That would have been the 3, that would have been the 4, and that would have been the 5. So it just didn't go up quite as much. It got rejected at this pretty strong resistance right there at 86.72 or 87.62. Then we came back down and got more support down here. And again, I'm in a new play. Now, larger scale, what I'm looking at, in addition to these lower supports, my mother-in-law's here. She's watching the kids, so I can do this. You'll hear them screaming, but I'm not ignoring my crying babies. I just have some help today. Now, so what I wanted to quickly explain is you can look at this current move and say, oh, what are your targets? I could easily say, all right, well, if I were to consider this like a wave 1, and then we retraced on wave 2, and this is a wave 3, I could justify that. And I always tell people, I hate when people say, oh, I don't use Elliott wave, or I don't use this, or I don't use that. That's stupid. Only an idiot would ignore an entire data set and say, I don't use that one data set because it's not perfect. None of these things are perfect. All these indicators and all these tools are just another asset that you have. It's another tool in your toolbox, right? So you want to borrow a little bit from everything. But if you were to use a purely Elliott wave and Fibonacci style, you would say, all right, that was wave 1. And I would say, what could we see at a wave 3? Well, the most probable target for a wave 3 would typically be a 1618 extension. That is the most common target when you're in an impulse wave and you get a motive third wave. So you can see my target for this run right here, the absolute best case scenario would be about a 20% run right to that 1618 extension right there. And for the record, it's kind of funny. I drew this target and left it there. I never actually checked where the 1618 extension is. I just dropped it right where it ended up being because I do this 100 times a day. I joke about it all the time. When you get to the point where you can just like eyeball a target and then you do a fib extension and you see that it's pretty much right on top of where the 1618 would have been, you know you're pretty good and you've been doing this a little too much because it's like second nature at this point. But anyway, that is a potential target. But what you have to consider is you can't just focus on one style or one indicator, one strategy. If I'm only worried about Elliott wave and I'm using Fibonacci extensions, I can justify a 20% target on this trade. However, you also need to look at other strategies and other tools in your arsenal. One of which is trend lines. Trend lines are extremely useful. They're the basis for my Ichima model because essentially when I use these dynamic support and resistance levels, I'm creating different trend lines. Without actually having a trend line drawn, I can anticipate by extrapolating a trend line here before it happens because the EMAs are so successful as dynamic supports. So in this case, if you zoom out, you'll see we actually on the daily, I have a lot of stuff on this chart, so it's going to be really messy. I'm going to try to see if I can at least clean it up a little bit just so I can show you guys. This falling wedge is still perfectly in play. So this falling wedge is a very, very bullish indicator. But at the same time, we have a strong topside resistance right here, right? That trend line resistance is pretty strong. So we would have to break through that to get to a 20% target on this play. So if you were looking at this and you were ignoring the trend lines and you were focusing entirely on a 1618 extension for a potential wave 3, well, in that case, you might end up getting rejected early because you're going to hit this resistance with this trend line resistance before you have a chance to break through to it. On the other hand, a falling wedge is a bullish signal. So if it were to break out of this falling wedge, we could have an extended move here where we not only get to this wave 3 extension, we could even get a further extension to like a 2618, or we can get rejected at the 1618, come back down and retrace a little bit before another push up, and that would be our wave 5. Then we retrace again, and then we get another impulse up. So there are several possibilities I'm looking at here. What I think is more likely, just based on everything we're seeing, and since there are some overall bearish indications in the midterm, if you look at the weekly, for instance, and I don't usually look at higher time frames, one of the best things about what we've built with Flux Trading Group is between me, Big Chonus, Chart Vampire, and Cryptomist. But Cryptomist doesn't do educational stuff and videos like we do. So a lot of the time I omit her in these discussions because she doesn't really do that sort of stuff. It's just she provides her signals and her analyses. But with Chonus and Vampire and they do more longer term and higher time frame stuff, and that's not really my specialty. My specialty is shorter term trading, day trading, whether it's on the majors and Bitcoin or altcoins. But when it comes to shorting the majors or looking at longer term, higher time frame analysis, those guys are insanely talented. So I usually leave that to them. So based on what they've been talking about, we have several structures that are bearish when you look at the weekly, which again, I'm not even going to open up. You can refer to their videos that they've put out where they break a lot of that down. I want to focus on the short term, and hopefully that'll clarify everything I'm trying to look at right now. What the hell is that? But yeah, so if you look at the daily, at least you could see this falling wedge. And it's important, and one of the main things I wanted to mention from an educational perspective is just to remind everybody that you need to look at every indicator you have at your disposal. It's moronic to just focus on one particular indicator and ignore all the other tools in your arsenal. So right here, I am bullish, short term. I think we're going to keep moving up. The only question is, everybody keeps asking me for targets. I usually don't even answer that. Like, I don't even give targets, and the reason why is because of my trading strategy. I fixate on risk management, and one of the systems I designed that allows me to be so successful is I don't worry about a target. I'm not going to sell when I get to a certain level, because what happens very often is it'll skyrocket beyond that level, then you're kicking yourself in the ass for selling too early. So part of that is a mental thing where you just have to accept that you can't change that stuff, and you can't get angry, and you can't FOMO in. And part of it is using a strategy like what I do. So instead of focusing on what the target could be, I just lock in profits. I lock out risk, I lock in profits. So right now, my stop loss is right at my entry. It's a risk-free trade. Depending on what happens when this one candle closes in 12 minutes, I'll make a final determination, but I'm probably going to move my stop loss up and at least lock in 2 or 3% profit. So if I locked in about 2% profit, my stop loss would be right about here, and you can see the blue and the yellow, right? That's the 55 and the 99 EMA. So if my stop loss is right around here at about 7,800, my stop loss will be below the top of the Ichimoku cloud, the 222 EMA, the 55, and the 99 EMA. So I would have all of those potential dynamic supports protecting me from getting prematurely stopped out. So I don't want to move it up too aggressively. I move it up progressively and lock in more and more profit. Now, if I see overwhelming evidence that we're looking at an immediate retrace and we're probably going to come back down pretty hard, I'll usually get pretty aggressive because instead of selling off, I still won't just dump it most of the time. Sometimes I do. Most of the time, I'll just move my stop loss up more aggressively. Like I'll say, hey, it looks like the way this candle closed, I think we're about to drop back down pretty hard. I'll move my stop loss up and lock in 4.5 out of 5% right away. And I'll get more aggressive with it, and I'll just take the stop. Because if I'm wrong and it does push up further, I can lock in more profit. And if it does retrace like I thought, at least I locked in a majority of the available profit. So that's my thought process. And now short term, again, the two things that I'm looking for immediately, if we can continue upward and we can remain this bullish activity, continue with some additional volume coming in, if we can get that volume trending up and actually see a substantial amount of volume pushing this market up, we could very easily and substantially profit by getting up to that 8,500 resistance before a rejection. If we can push up to 8,500, then we come back down to the lower 8,000s, maybe 8,250, 83. Then we can make a final push up and test the 8,600 resistance. And then from there, we're pretty much right on the doorstep of that trend line resistance. That's going to be the biggest key. So right now, focus on locking in profits. That's what I'm telling everybody to do. That's what I'm doing. I'm moving up my stop loss to lock in more and more profit. And then once we get up to that level, if we start pushing through this 8,600 resistance, then I have to seriously consider whether or not I think we can get up to that 20% on this big move, or if we're going to get a rejection from that trend line resistance. Now, if we do get a rejection from this trend line resistance, I don't mean just hit it, come back down a little bit, because we can still push up on the next attempt. If we hit that and just dump pretty hard back down $200, $300, $500, we're most likely going to come all the way back down. In that case, I'm going to be happy that I moved up my stop loss and locked in that profit. But if we do break through that trend line, which by the time we get there, it kind of could be anywhere in that space. It's really hard to say. It depends how fast we move. It could be anywhere in that section over the next several days. Hopefully we get a lot of volume and we can push up pretty quickly and get there within the next 48 hours. That would be pretty amazing. That would be pretty explosive. But, I mean, if you go back and look, we've had plenty of moves like that within a single day. It's not uncommon to get that sort of action. Whoops. The last time we got a solid pump like that, it was, 7% in a day? We're not up nearly that much. Well, I guess we are, because we're actually up 5%. Yeah, a couple more percent. That would be pretty nice to finish up around that 618 extension. If we can push up there before the end of the day, that'd be pretty damn bullish. So yeah, that's what I'm looking at short term. I'm focusing on the Elliott wave count, and I'm looking at the Fibonacci extensions, but I'm still focused predominantly on the top side resistance of this falling wedge. And just a reminder for those who came in late, a falling wedge is one of my favorite bullish indicators. If I see a falling wedge and we're getting close to testing the top of that wedge, if we start poking through and breaking through that top side resistance on the wedge, if we can start poking through that trend line, I'm going to consider that a very bullish indicator. That's a potential breakout, because if you break out of a falling wedge like this, you can get an explosive run. And that's why I love falling wedges so much. The one thing I don't like about it on this dip and this dip, this major support zone, my bonerific support range, held so well, which is always a great sign when your supports are holding like, that well. On the other hand, I would have kind of liked to test the bottom of that falling wedge again. If we could have come back down and tested that before the next move, I would have had a lot more confidence that we could push up through it, because the last time we actually tested this trend line down was over here at the end of last month, and we've been kind of moving sideways since then. We're moving up a little bit. We're trending up overall on average, but it's taken a really long time, so that doesn't inspire a lot of confidence. If this last move up pushed up higher to where I originally thought it would, up to about 9K, I'd be a little bit more confident. So I'm playing it by ear. I'm not getting too aggressive. As I said, short term, I obviously am bullish, hence my big entries around here. And then midterm, I am bearish based on the analyses that Vamp and Jonas have put out. Some of that stuff is public, so for those who follow them on Twitter, check out all their recent analyses where they cover some of that stuff when they're looking at the weekly and the monthly. And for the stuff they haven't shared that's only in the group, anybody who's in the group, just head over to the Vamp and Jonas sections and check out all their stuff as usual. So that's it. Just a really quick rundown of my current outlook, short term, and what I'm looking for on BTC. My Ren trade, I actually got stopped out of. So we had this breakout. I didn't aggressively move it up. And the reason I didn't aggressively lock in profits, even though I was up 8%, I got the breakout I was looking for. But the way I looked at it is I can move up my stop loss and lock in that profit, or I could take a little bit of a chance. Either it continues to move up and it outperforms BTC, but on the other hand, if it comes back down and it stops me out, I break even. And the best part about this strategy is, since I have such a big open trade on Bitcoin, as long as I break even on Ren, I'm making just as much money as if I held BTC during the entire day. So no matter what, I'm making money. I can't possibly lose a penny. I'm up 6% on BTC. So I would have liked to lock in some profit on Ren, but I took a chance. I ended up getting stopped out, and I broke even. But I'm happy with how that played out. It did exactly what my strategy is supposed to do. And anytime that happens, I'm satisfied with the result. So, gotta run, but anybody have any quick questions? I'm not looking at other charts right now. I'll do that later tonight. I'll do a private live stream with just the premium group. And if you want me to look at a bunch of other alts, we could take a look at some charts together and go over some educational content so we can add the stream to Flux University. But if any of you guys have any quick questions now on what I discussed, 30-second call. Go ahead, type in the YouTube chat any questions you have. I'm happy to answer. Yes, I am the bomb. That is the proper technical term. It's the bomb. Like the Germans. Let's see what everybody else said on here. Yeah, Gio, I'll look at link with you later when I have more time tonight. Once the wife gets home and I don't have to watch the kids, I will check out link with you, whatever else you want to look at. Yeah, there'll definitely be some. Corn said you think there'll be. Cornholio said you think there'll be a fourth wave correction. I already talked about that, so that would be 1, 2, and if that's right, if we're able to push through that topside resistance, which again I don't know if we will. Like when you have a falling wedge and you have a topside resistance, like when you have a trend line like that, that's trailing down. If you break through that, you can get a solid breakout. But what happens after you break through that resistance is it becomes a support. So if we were to push through it, as soon as we get above it, it becomes a major support. So then we retest it usually before going up again. So it would work out perfectly. Ideally, we could push up, even forget about this being that wave 3, where this is 1, 2, 3. Even within this wave 3, we have, it could be a 1, 2, 3, 4, 5, right? Filling up that wave 3. And if we had something like that, 1, 2, 3, 4, can then test the top, right? That it would test ideally right where this horizontal support is and right where it meets up. That would be a great area. Check this out. So what I mean is a great way to see this play out, and I don't know if it'll happen just like this, but a really great way, because it would be a perfect example to teach with, would be if something like this happens. So this is 1, 2, 3, 4, and 5 goes wherever. I'm not going to worry about that. More importantly, subwaves right here. So for this wave 3, if you had like a 1, 2, 3, 4, 5 to make that wave 3, just make that a different color so it's easier to see. So if it was something like this, right? So say this main wave 3 here is broken down into 5 waves. So say we got like a 1 and it gets up to about this resistance right here at 84.93. So call it 8,500. Say wave 1 goes up to like 8,500. We retrace a little bit, and then wave 3 pushes up like that to about 9,100, 9K 9,100. Then that retest would be perfect if it was like right here, because we have such a major support zone, because we have confluence where there's a strong trend line and a horizontal support. That's an ultimate confluence zone and a really ideal space, an ideal area to get a major support bounce before finishing off that third wave with that sub wave 5 to finish that wave 3 all the way up for a 20% run to the 1618 extension up top at 9,500. That's an ideal scenario. I'm not saying it's going to play out just like that, but in a perfect world, that would be a really great area to see some major support if it happened to retest right around there. I don't know if we got this wave 3 all the way to 9,500, I don't think wave 4 would retrace all the way back down to that 8760 support or the trend line right there. It wouldn't quite go that far. Least of which, because if it went any further than that to this trend line, it would invalidate this entire count, because wave 4 wouldn't retrace into wave 1 territory. But that's my thinking on the potential count that we're looking at. Were there any other questions? Yeah, I have been feeling better, thanks. Last night I felt a little sick again, but mostly better. I have some money to invest. Can you trade for me? No, I don't do that. Ever. I would never take that responsibility. If you're not, well, if I wasn't in a trade right now, I'd wait until we retrace. I mean, we're pushing up now. You could buy now, and then it pushes up to 8,500. You might consider that a good trade. It's really hard to say what would be a good trade for someone else, because I talk about this a lot. I don't even like sharing my exact stop losses, my exact entries. I always vary it a bit, and I tell everybody in the group, never blindly copy me because my risk tolerance is different than yours. My marital situation is different than yours. If you're 20 years old and single and I'm 35 and married with 2 twins, I might not be willing to take the same risks that you can. Maybe you have a huge bankroll that's bigger than mine. Maybe it's smaller than mine. It's really hard to say. So you never want to blindly follow anybody, and anybody who gives you straight up signals and says enter here, target here, set a stop loss here, they don't give a fucking shit what happens to you. You can get completely wrecked and they wouldn't lose an ounce of sleep at night. Me personally, I would feel horrible if one of you said, hey, I copied all your trades and I lost $100,000. Now I'm living on the streets. Even though I did nothing wrong, I would still feel horrible because I have empathy because I'm a human being. Unless you're a douchebag, then I have no empathy for you and I hope you get wrecked and lose everything and live on the streets. But as long as you're respectful of me, I'm respectful of you, and I hope you do well, and I care about you. So I always urge people, don't blindly follow me. Anybody who gives you straight up signals, be suspicious of them because they're not really looking out for anybody else's interests other than their own. It's really irresponsible because all of us are different, our situations are different, and you should never set a stop loss based on what someone else does because they might be willing to risk a lot more, they might be willing to risk a lot less. You have to learn how to do that stuff and build an education and understand the various skills that you need in order to trade successfully. Then you can make those decisions for yourself. The best I can do is share what I'm doing and hope that you can use that as an example to build upon. I'm not sharing what I'm doing so you can just blindly copy me. And that's one of the main reasons I don't trade for people or things like that. Like I wouldn't want to trade somebody else's money when they might not have the same risk tolerance as me and they can't afford to take a loss. Anyway, any other quick questions in there? But, all right, that's it. We'll call it a day. But that last question where he said, anything, what would you wait for? That I can answer. So you could enter here and then it goes up. You might consider that a good trade. But ideally, after we've been pushing up a little bit, I'd like to enter after a retrace because think about it. If you enter now and it goes up more, you might consider that a good trade. But chances are we've been moving up pretty nicely here. Most likely, I'm not saying it's guaranteed, but most likely, if we pushed up to that 84.90 resistance, we're probably going to retrace right around to where we are now, roughly. Not necessarily exactly there, but roughly. So you would probably have an opportunity to buy at roughly the same price anyway. I would say 70-80% of the time, I wouldn't buy here because I would expect to retrace back to around this level anyway. And it's better to buy at this level when you have nowhere to go but up because you're here as a support than to buy it in this area when you're going to be retracing back to a roughly that area anyway. It doesn't make much sense. So I'd wait for a little bit of a pullback and then see if that changes. If it follows this path, like if it were to get rejected right here at 84.90 and then come right back to this 382 extension at 82.25, then it's following my model pretty well. That would probably be a good time to buy. Depending on your situation. But yeah, that probably would be a good play because then we have that next subwave that we can plan for. But if you don't know how to set a stop loss, you shouldn't be trading at all. Take out all your money, put it in fiat, keep it safe, and start paper trading so you can practice these things and learn how to do it. And once you know how to set stop losses correctly and manage your risk appropriately, you'll be in a good position to trade. Because if you were to enter right there, that could be a really, really great trade if you have a stop loss 1.5 or 2% below your entry. You don't want to enter right there without a stop loss because it's possible we can come all the way back down and retest my original entry again. So anyway, that's a bunch of info. It's enough for you guys to mull over. I'll leave this stream up so anybody who's not in the group, you can just see this on my YouTube. If you're not subscribed to my YouTube, you're a useless piece of shit because I've been telling you guys for a year, subscribe to my YouTube. And if it's taken you this long to care enough to do it, then you're not a good friend. All right, I'm going to go change some diapers. Thanks for stopping by.